Bitcoin falls below $24,000. Crypto no longer a $1 trillion asset class. What is up, everyone? Welcome to Crypto Capital Venture. Thank you for coming by. Let's jump into the Bitcoin video. Here it is. The move on the weekly chart. It is an urgent move to the 200-week moving average. At the end of the day, everybody, this is the move. It's been just crazy to see this happen over the months. We've been tracking it for so long. Bitcoin's actually there once again, and I say once again for a very important reason, because it's exactly why we've been anticipating it. This is what happens in Bitcoin cycles. We're going to talk about the relevance of that. Crypto market cap, like $970 billion. It's crazy because not long ago we were tracking Bitcoin at $1 trillion itself. Now crypto as a whole in its entirety, not even $1 trillion market cap. So things have consolidated for sure. In my view, this is commonplace. In my opinion, this is normal. This isn't financial advice, everybody. I'm not a financial advisor, but I've been tracking this data for years and years and years. I have so many videos. If you just go back and you look, I've been tracking this. And this move that's happening right now has happened time and time again before. Now, before we talk about the relevance of what's happening here, before we talk about the bottom formation of Bitcoin and amidst all the fear that is going on and potential more downside in play, because I'm doing this video pretty early here on a Monday, I want to just dive in and talk about, well, why, right? I think we should just real quick, not long, real quick, talk about that piece of the story. This article gives a few reasons for context. Inflation. We just saw new inflation numbers last week, 40-year high for inflation. We saw a hammered NASDAQ, as this article says. Traditional markets, everybody. We know Bitcoin is following, crypto is following equity markets. What is going to happen with those markets? There's talk of a recession. There's talk of this getting really bad. What if it does get really bad? How do we take that data and mix it with Bitcoin now? Because we really haven't seen Bitcoin cycles in a recession. So we're going to talk about that. And then Celsius on here as a wild card on the list. If you're unaware, they announced that they're pausing their ability of its users to withdraw or transfer their coins. They're locking up people's crypto right now. Imagine that in these markets. Imagine that. This is why we always say, have your crypto offline. Make sure you own your crypto. This is why this stuff happens. So they're locking up crypto because of extreme market conditions. Incredible to see that. And so we see these things mixing together. The one thing not even on this list, there's a war. There's a war going on right now. So there is a lot of volatility across the world in so many different layers. And Bitcoin right here, testing key indicators, testing key areas, because with the 200-week moving average, we are also in this very important macro higher low area. Let's dive in. Let's talk about the importance of all of this coming together. And I want to start with a really quick clip from February 2022. This is a while ago. The vicinity that I see it going to potentially, if it gets crazy, is the $19,000 to $20,000 area. Why is that relevant? Because we've been talking about that area in context to the weekly chart, which is back here, and it's sitting right in that $19,000 to $20,000 area. That's this. So $19,000 to $20,000 area for the 200-week moving average is what we were discussing. And check it out. It has moved up, right? It's right now in the $22,000 vicinity. Bitcoin like 5 to 6% above that area. That was all the way back in February. And now here we are, Bitcoin finally making its way down. And I'm not showing that video to say, hey, I predicted this. I've been saying this. I've been warning everybody all year long. I'm not saying that. The reason I bring that up is because that data, as we were just cautiously optimistic, is what we always have been on this channel. We look at targets to the upside and the downside. I mean, we enjoy uptrends. I enjoy uptrends more than anything else, always rooting for the bulls. But that cautious optimism has to bring in downside targets. And the downside targets on the macro charts is all down here. And this is what we've been tracking all year long, just the potential for it. And here we are now, we are there. I charted this chart back in December 2018 at the last bear market low. It is not perfect, but the general concept is so on point. Bitcoin revisiting now to this area, the 786 line, and the what is this? The 50-month moving average. Now, when I charted this, the 786 line that I speculatively put here, a little different than where it actually is now, and that's what I want to talk about. So the 786 line is important for multiple reasons. And if you don't know what the 786 line here's what it is. The last bear market low to bull market high, most previous, we have this higher low Fibonacci, this range, this channel where Bitcoin tends to, in its cycles, just gravitate back towards. And this is what it looks like with Bitcoin charts right now. The 618 right around $28,000, the 786 right around $17,000. Bitcoin is in it. It's in the range. And the reason why it's so important is because this range has really identified and helped us identify Bitcoin bottoms previously. So here's the 786 line all the way back here in 2018. There's Bitcoin just forming its bottom below the 786 line. And here's Bitcoin in 2015, Bitcoin forming its bottom below its 786 line back there. Now, you might be saying, well, hey, Dan, the 786 line, that's still all the way down here, $17,000. Are you saying Bitcoin's going to form its bottom down here below the 786 line? That would be, from just this charting perspective, the picture that we're painting, that would be like a perfect looking picture, a perfect looking painting if it happened. And it very well could. Let's just say that really quickly. It could. But this is the one data point on this chart that's a little different this time. And that is the 200-week moving average. The 200-week moving average trading just below where Bitcoin is right now, but trading within this Fibonacci on the macro. Now, in previous cycles, Bitcoin revisited that 200-week moving average, but notice that that red line was below the 786. It was below the Fibonacci, that 200-week moving average. And all the way back here in 2018, it was below the Fibonacci. So that's what's different this time. This time, Bitcoin, we have the 200-week moving average just perfectly confluent in the middle of the Fibonacci. And so this is why it's, number one, nobody knows where the bottom will be, right? But this is why it's important to follow and track and to become aware of these indicators, because when they start coming together, we really start getting a nice picture of the long-term growth, the long-term uptrend, bottoming out cycles, right? And then overbought areas on these charts. We get to just really sense, we get in touch with the charts when we're following all of these things. So right now, the 200-week moving average, 22,400. Now, the other thing that's extremely important to bring up is this area on the charts, and that is the oversold, the RSI, the momentum oscillator. The momentum oscillator on Bitcoin. Check this clip from January 2022. But that capitulation area for Bitcoin, I truly think, would take place on this RSI chart in this general area between these two red lines. Historically, that is an area. So those two red lines on this RSI, this is what we're looking at. And look, Bitcoin, not only there, Bitcoin's below it at this point. So now we're talking about the bottoming formation of Bitcoin that we've been just waiting for all year. Well, now Bitcoin is there. It's what we've been talking about. And so if we look at this data point in comparison to previous cycles, here are these red lines. You can see Bitcoin in the 2018 cycle slightly below that bottom red line that I just very speculatively charted in that video. And then Bitcoin in the bear market low of 2015, you can see Bitcoin slightly below that bottoming out red line. There is this data, it is pretty consistent thus far, but there is absolutely nothing that says that Bitcoin just can't overextend itself more than it has previously, right? And the setup is so there for that, by the way. And the question is whether or not we get consolidations along the way so it's not as bad before it bottoms out, or if it's just straight up capitulation quickly because it's going to be even this week. As we start this week, traditional markets start opening, how bad is this going to get, right? Or will there be that support? So we're going to continue tracking now that Bitcoin is here. It's at historically low levels in terms of oversold on this momentum oscillator. This is a slower moving momentum oscillator tracking the momentum of Bitcoin, the bottoming out ranges of Bitcoin. Bitcoin, I think at the end of the day, is forming its bottom, and it's going to be a very volatile ride. But I think the most important thing here is when we zoom out on this picture, we can call it a painting, and we look at Bitcoin cycles and we look at how this has happened time and time again, we begin to, in a more easier fashion, plan and formulate a plan and attack these charts, right? And just the last piece of data I really wanted to share was this. We're like around 750 days post 2020 halving. Look at the Bitcoin bear markets previously. 868 days post the 2016 halving. That's when the 2018 bear market low was. So over 800 days. From the 2012 halving to the 2015 bear market, 777 days. From a time frame perspective, Bitcoin sitting around 749, 750 days post 2022 or 2020 halving. Bitcoin is in this general vicinity now from a time frame perspective where the bottom seems to be in its formation, as previous cycles have indicated, and as previous cycles offer that historical context for us to even say that. And so when we're here, now is the time to plan. And we're like, for instance, this video is not going to have as many views as my videos back here was getting. And that's a very important data point. That's a market sentiment data point. That's a fear data point. And historically, when fear is this high, when so many people have left the markets and people are giving up, and all these indicators are coming onto the charts that say Bitcoin's bottoming somewhere here, this is the time to really start planning for the long term. This is the time where opportunity is the strongest. And a lot of people have left, but there's a lot of people still here, like you and I, trying to plan, trying to figure out the best attack. And everybody's different. We anticipate all of this downside all year long. We do that. We've done that so that we can have a conservative approach to these markets. And it's so that we can, in every given moment, be prepared for what is next. And so here we are now. We're preparing for what is next still. To the downside, we still have the 786 line at $17,000. On the very short term, I am watching the 200-week moving average right around $22,000. I want to see if that holds. I want to see how Bitcoin begins interacting with that area, because guess what? Bitcoin on this chart has not been at a 200-week moving average touch since the COVID swing low. And before that, not since the 2018 bear market low. This is such a crucial time for Bitcoin on these charts, everybody. So prepare, sit back and plan. I appreciate you watching. I'll see you all in the next video. We'll do an update as Bitcoin progresses. Hang in there, and God bless.